Vechain has dropped over 61% in the last 28 days. In this video, we're going to dive down into the world of Vechain, taking a look at the price action of the VET token. Guys, as we get into this video, if you find it useful and informative, then hit that like button. Really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. There's a link in the description down below to our Discord server. If you haven't yet gone over and joined us there, then do go ahead and check it out. We do a lot more kind of TA, Q&A and things like that down in Discord. You'll be able to mention us and we'll be able to answer your questions as well if you happen to have any. Right, with all that said, done and out of the way, let's actually jump on down to the desktop and take a look at what is going on here with Vechain. Okay guys, so we're going to start things off with the weekly chart, because I think it's really important that we do zoom out and we pay attention to the bigger picture, right? Because I know sometimes that kind of smaller time frame, whether you're looking at the daily or the hourly, they sometimes can be, a little bit too much. Sometimes there's too much noise going on there, and sometimes you just cannot quite tell the bigger picture, the macro picture, where things are going to be going slightly longer term than maybe next week, right? And that's really where the weekly chart comes in. If you're ever in doubt, zoom out, pay attention to this weekly chart, because this is really where things are very, very clear. Okay, so I'm going to run this just from the top for anyone who's new, but basically we are tracking 5 impulsive moves to the upside, okay? This was an ABC until we got confirmed with that third wave high, okay? Basically, this was an impulsive trigger based on the size and the of wave 1, right? Or what would have been a wave. This meant that we were looking for a fourth wave correction. This is ultimately what a lot of people were calling a bear market, because they couldn't quite see that this is actually a part of a fourth wave correction before the fifth wave was coming. Okay, so we know that wave 3 was an impulsive move from the low areas of wave 2 and basically measured higher than 1.382 of wave 1. Okay, that's an important kind of distinction to understand why it wasn't just an ABC up on a weekly chart, but in fact it's impulsive on the way up. Okay, not only does this confirm bull market, but it also confirms the fact that we are looking for some pretty interesting high levels to be achieved here when it comes to Vechain and VET token, right? But it's also important that we acknowledge that this was a very significant pullback just down here, right? All-time high down into this low level. If we actually measure that distance, we can actually acknowledge that this was a 81% drop, right? From all-time high down to this fourth wave correction. Now, by most standard markets, you could argue that that absolutely is a bear market, right? And for the most part, you could argue that that is correct, right? You could argue that it is correct. It is a bear market, right? And pretty much in the bear market for crypto, most of these cryptocurrencies are going to lose over 90% of their value. Some of them are just simply not going to survive a crypto winter. These things last, a bear market in the crypto space lasts for a good 18 months. So you're not going to necessarily see many projects survive, specifically when there's over 15,000 of them. Some of them just simply won't have the capital to survive a bear market, right? Now, obviously, some of these projects have been around for multiple cycles already, Vechain being one of them. They'll survive very well, and their tokenomics are actually set up perfectly for what they need to do. Understand that it's might not be set up perfectly for price discovery, and it might not be set up perfectly from an investment point of view, but it's set up perfectly for the use case of the technology, which is absolutely fundamental to where things are going in the future. Okay, so don't get those two things confused. There's a reason that China is really big on Vechain technology, and that's part of that is, of course, the tokenomics, right? It hasn't got so much to do with speculative investment on the store of value token VET. Okay, that dual token system is absolutely fundamental to what they're doing. Right, okay, so we know that an 81% drop is very significant. We pushed up, we fell back down, and we fell back down 61%. Okay, so lots of volatility going on here. A lot of this is actually driven, though, from the volatility of Bitcoin. Bitcoin is hitting a lot of very specific price points to the penny, and lots of manipulation, lots of things going on with BTC that unfortunately is affecting many altcoins. I do feel, though, however, that retail investors are getting very frustrated, fed up, and annoyed with BTC to the point where actually they're just saying, fuck it, we'll go and just join the altcoins and make them pump instead, right? And I think actually people are waking up to the fact that Bitcoin isn't going to make you millionaires. It's got a very poor return on investment in comparison to many of these altcoins. And depending on your appetite for risk will depend on whether or not you stick with Bitcoin, Ethereum over maybe something a little bit more risky, depending on your appetite, Solana, ADA, Polkadot, Matic, Vechain, Harmony, whatever it may be, right? On this channel, we like to balance risk with solid research, okay? Do your own research. We stress this every single time. Vechain, do your own research. There's lots of FUD out there, lots of things that are true, lots of things that are not true. Make sure you understand which is which. Very important that you do that. Same with anything like Cardano, XRP, Harmony One, Matic, MTV, you name it. There's going to be a mixture of emotions on both sides. People call it a shitcoin. People absolutely love it, right? And there's FUD and there's news, and you got to figure it out for yourselves, right? And we obviously highlight things that we've done. We speak to the teams pretty much on most of the projects that we're invested in. And of course, we do a lot of research before investing in them, right? And therefore, we're pretty comfortable. Now, with Vechain, there is obviously a higher risk to associated with it, just the fact that it is an altcoin and it's not Bitcoin, for example. I disagree personally, because you still see the percentage swings with Bitcoin in the same way that you see the percentage swings with these altcoins. But nonetheless, I think the risks are more associated with the fact that you need to do a lot more research behind the team, the use case, and all those things. But nonetheless, Vechain, in my opinion, is a solid investment. It's one of those ones that has so heavily integrated in the world by big, massive players, hard to not see what is potentially on the horizon here. Now, obviously, an 81% pullback from all-time high down to this wave 4 low. You can call it a bear market if you want. I see this as a correction because it is a fourth wave, and we are looking for that fifth wave high. Now, the manipulation that's going on with Bitcoin has made it very, very volatile since then. Okay, and we had obviously the Wyckoff distribution, Wyckoff accumulation, various different things going on with Bitcoin, kind of playing a part. And then obviously we started to see, the September pullback, which again happens every single September. We saw the push forward, pretty much then from October into November, and we'll pull back in December again. Self-fulfilling prophecy. Lots of people were expecting a pullback in December, so they make it happen. That being said, I'm expecting some pretty interesting things in the new year. And here is one of the most easiest ways to kind of articulate this. If we take a look at the area of wave 1 down here, we were actually oversold on our stochastic RSI. Now, if I actually go ahead and grab hold of me, I'll just move myself up here for a second. Okay, so oversold here, right here on the stochastic RSI, and at the bottom of wave 1. Okay, we moved up to the top of wave 1, and we were, of course, overbought. So we had to have a correction. We came down to the low of wave 2 where we were oversold. We moved up into the highs of wave 3. There's a little bit of volatility here, specifically around what was going on with Bitcoin and the Wyckoff distribution model. And obviously nothing moves up in straight lines, so there were a few pullbacks, but nonetheless, we didn't actually collapse all the way down into the oversold area until we were at the bottom of wave 4. Okay, we then briefly moved up to the overbought area just here a little bit, pulled back in September. Okay, not taking us down too far. We pushed back up again, right up here, okay, into the overbought area. And right now, where we are, we're oversold. So every time that we've been oversold, down here is the bottom of wave 1, the bottom of wave 2, the bottom of wave 4, and we're oversold right now. Every time that we've been down here, we've pushed up. We pushed up on the stochastic RSI to the point of overbought. Okay, now that can happen in multiple different ways, but basically the stochastic RSI is all about momentum, price momentum, etc., right? And it's very sensitive to price movement. Now, what we are thinking is likely to occur here is that we're going to go after this fifth wave. Okay, now there's a trend on this chart. Okay, this is not just the standard Fibonacci retracement tool. This is a trend-based fib extension. Okay, and what we've done here is we've taken the low area of wave 2, the high area of wave 3, and the low area of wave 4. We've taken a look at the downtrend here, the uptrend here, and the downtrend over here. This then shows us moving out with a theoretical high for wave 5 at a $1.20 area. I'm not saying this is guaranteed, but basically it's math, right? It takes a look at these particular trends, where we've ended up, where the beginning level was, where the end level was, and where we are going to potentially go on the next one, right? It's predictive using math, right? And right now we can see that this works out at a 4.236 extension at $1.20 by the time you get to that fifth wave high. Now, this is no guarantee, but it's, a pretty good stab in the dark of what we think might occur. Now, we can be more conservative about this, which we have done multiple times. Let me just clean this chart up a little bit, get rid of some of these drawings here, because we don't want to cloud it up too much. But basically, we have an interesting area here of $1.20. Now, that's optimized. That's potentially the absolute peak. I can't see it going higher than that. And it's based on the actual trends of the bull run, right? So the best kind of data that you have for understanding how the performance has been so far and what's to happen next. Now, when we jump into our daily view shows us something different. Okay, and we'll go through that in a moment. But basically here, we have a conservative model. If we only look at the high wave of 3 and the low wave of 4, we can see it moving out to $1.01, okay, which is why most of our thumbnails have $1 on them. It's a nice conservative model, and it kind of aligns nicely with the pullback of wave 3 to 4, okay? Now, there is something really important, I've spoken about this before, on our daily chart. And this is a big, big play. This is an Elliott wave triangle. So not only do we follow Elliott wave in terms of impulsive moves and corrective moves, but we can also spot things like these. These are triangles. Some people might not necessarily articulate these as an Elliott wave triangle. They might call it a triangular wedge. They might call it ascending triangle, descending triangle, whatever they kind of want to call it. When you actually put in your Elliott wave counts of A through E, you get a pretty good idea as to what is going on. With most of these as well, we like to obviously have those wave counts inside with an A, B, and C. Helps you kind of confirm things, and you can kind of make sure that things are running on track. For the most part, though, this is a big Elliott wave, okay? This is not small by any stretch of the imagination. Okay, this actually spans pretty much from the beginning of 2021, right, around April time, basically coming down to complete that wave A, moving up to wave B, wave C, wave D, yet to actually happen, and then wave E, right? So we're just over halfway through actually completing this, right? About 60% of the way through this particular pattern, right? Which means it'll be next year that we actually see this get completed. And this is going to be a really important one, because when we move up into this wave D, this is going to be a real high point. You're going to see some FOMO activity kind of coming in. People thinking finally that things are kind of getting some traction, moving up quite nicely to the upside. Maybe we're going after the previous highs that were over here, only to have us pull down. I think it will be a rapid decrease. I think our profits will be taken. We'll move rapidly down to complete this wave E. And then once that comes in, we are going to see like an absolute rocket to the upside, some parabolic action on the Vechain. Okay, this could be the move that actually takes it to complete in that $1 threshold. Okay, that $1 level. I think it's going to be finding major resistance up at that point. Okay, and again, this is approximately that 10x position, 11x maybe by now, considering its position. So it's very much possible with pretty much being in line with the rest of the crypto market. Most things now that were tracking a 5x up here are now tracking about 10x on their kind of predictive levels. But yeah, for the most part, this is a really good solid pattern that plays out over and over and over again. Of course, it doesn't play out every single time. There is, of course, the possibility that it doesn't play out. But for the most part, you see these patterns playing out time and time again. Very rarely do you see them break down and not actually play out. But for the most part, they do. And when they do get going, man, do they go. And I've got an example of one that I can show you guys. It's actually on the Harmony protocol on the hourly. Okay, this is something that if you're familiar with, we had the A through E here, and then this led to an impulsive breakout of this Elliott wave triangle just here, right? It's on the hourly, so it's actually on a smaller scale, but you saw the same kind of percentage moves, right? We saw that basically come in for the A wave, the B wave, the C, the D, and the E, and then basically we broke here to the upside. We actually set that up there about 76% move from this on the hourly move. So really interesting kind of stuff, right? And this actually got to 38 cent. We moved from 21 to 38 cent. And it happens relatively quickly here on the hourly chart. So when we're talking about a daily move, it's going to be significantly bigger than this, in my opinion, and it's going to be pretty impressive. And I think it's going to take a lot of people by surprise as well. So one to watch out for, be aware of. It's not something that's going to be quick. It's something on the daily chart that is going to take quite a bit of time to play out. It takes us into next year. And again, timing is going to be the hardest thing to kind of gauge, but we are expecting this move to the upside soon. Okay, this will probably happen in January, and then we'll probably pull back in February, and then I would have thought that we'll probably end up going for this in around March, April time next year. Okay, pretty much in line with where our highs were previously, in basically the end of the all-time high. So yeah, definitely one to watch out for. Now on the hourly chart, there is something interesting kind of going on just with this descending parallel channel. Again, we had the breakout, but we did get pulled back down a little bit. Again, this is a slightly bigger ABC move. You can kind of see it here, but I still think there's a little bit more volatility yet to come. I'm not expecting a huge C wave at this point. It'll be a little way higher, but not too much. And if we actually look at our stochastic RSI, we're already overbought. So there's a couple of things that we should probably be aware of. This could actually be an ABC of this variety, but this doesn't stack up overly very well in terms of the length of that C wave being incredibly short. But there is definitely an ABC to the downside. This one is very obvious to see. This is why I call this the B wave. So in theory, that should be your B, and your C should come out here with that being your A wave high. But right now, we're probably looking for a smaller pullback just to complete the potential ABC inside of this C wave, right? So if we actually take a look at it from here, we might push up a little bit, we'll have a pullback, and then we'll start pushing forward. Okay, but again, we are looking to actually pierce higher than our A wave. So again, yeah, one to watch out for. I think there's a lot of things kind of going on in the background of BTC right now, so be mindful over this. We did see deviation from an ABC on Bitcoin, complete disregard of the wave counts, which was very frustrating. But right now, yeah, I think we are looking for tracking a slight higher out of this area, this parallel channel on the smaller time frame. But for me, personally, on Vechain, not really paying too much attention to these smaller moves on the hourly. The big play really for Vechain right now is coming in on this Elliott wave triangle. Right now we're at the bottom of wave C. This is a good entry point if you're a long time holder, because you will come up for D. You could potentially, if you wanted to, take profits at D, come back down and rebuy at E, or just getting in here and hodling your way through into next year isn't a bad idea either. Personally, obviously, I'm not a financial advisor. Chris is not a financial advisor, so make sure you do your own research. But this is a pattern that I really do like. It has some good, promising potential to it in the future. So guys, I am going to leave the video there. Hopefully you have found it useful and informative. If you have, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.